The Korean indices are also trading above the flat line, but the Japanese indices are the ones that are outperforming.
The last 1 year, its market cap has surged more than 4 times.
The all-time highs, which is just about 200 points away, still very much in sight. The line of sight is there.
The fiscal surprise would be positive only when we realize how the dividend would be treated.
But it's also a problem of plenty, so I think every government will welcome this as well.
You've got the Midcap index, which is up about 0.5%, 230 points higher.
Leadership is looking very similar to the 2003 to 2008 bull market.
We expect 2 more quarters of these low margins.
So I think just about 100 points, right? I guess we can start the countdown. 100 points left for our all-time high level.
6 out of 8 employees at Infosys are getting trained on generative AI.
Nifty has gone ahead and hit a fresh record high.
We have the Midcap index at a record high across all the major indices. It's a sea of green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon, you're with Closing Bell, and it's a mega move. The bulls have announced their comeback in style. It's taken them just about 8 to 9 trading sessions to come off from what were mid-May lows. Around 13th of May is when the Nifty hit a low of around 21,800, 1,000-point march, and it's a resounding move right now. In fact, it's building 300 points up on the Nifty, and we're almost at the doorsteps. Yeah, 22,900 on the screens.
Oh, absolutely. So we've not just crossed 22,800, we've crossed 22,900. The sensex has mounted 75,000. And it's just like green means go. It's just been going on and on, particularly in the last 1 hour. And it's a blue chip day because midcaps are trailing a bit. The midcap index is just up 0.3% at a time when the Nifty and the sensex are up 1.3%. You know, Nigel, this is the 6th consecutive day of gains for the Nifty and the 10th consecutive day of gains for the midcap index. So one-way move.
Well, that's right, and maybe the action's not yet done because we have expiry that plays out. That's the weekly expiry that plays out. And at the start of the day, the bearish view was that we won't get past 22,700 odd. We're at 22,900. So some of those shots have already got squeezed out. A few of them may be waiting as well. So that could be another reason why we'll see an additional fillip in the last 60 minutes or so. It's going to be volatile, but let's see how it goes. The Nifty Bank coming back, coming in style. You have both the pillars of the market doing well. The domestic-facing themes, the banks, they did well today. And also you had a bit of a rub-off because of the NVIDIA results. You had some positive commentary coming in from the tech names as well. So IT and banks do well. Well, beautiful looking screen today.
Well, now, add in capital goods and autos. So both those indices too are higher. So the capital goods index has moved up close to about 2% and autos is up 1.5%.
It's a fabulous looking screen, right? Because you've got a lot of different large caps participating. It's not just one stock or 2 stocks. It's across the board. Banks are leading. Some of the IT names have been doing well. FMCG, Reliance in the last couple of days. So if you just dial back and, we put up that question saying what changed? Where has this 1,000-point rally come in from? 1,054 to be precise, but the numbers are changing so rapidly that I calculated this barely 10 minutes back and those numbers are already outdated. But basically 13th of May is when we hit that low of 21,821. So what changed? Just 4 very quick points. Number one, politics. The big jitter point was when those electoral polls were coming through and the voting outcome, the voter turnout was low. From that point onwards, it seems the market narrative has shifted and the market seems comfortable with the fact that even if we have, the sitting government crossing and getting a number of 272 plus around 300, there will be political continuity and policy continuity. So that's number one. Number two, there's a lot of global catch-up that India has had to look at, and that seems to be beginning now. Because remember, Wall Street has rallied between 3% to 7% on the NASDAQ in the last 1 month, and we have missed out on most of it. So it seems some of that is now neutralizing as well. Number 3, earnings. There are no major disappointments or major downgrades as Q4 is winding up. In fact, most estimates on the street for Nifty earnings for FY25 are still in between 13% to about 15% growth. So that's that. And number 4, of course, yesterday, if banks needed a trigger, they really got it in the form of that RBI bonanza. The fact that the dividend is so big is leading to a lot of speculation on what it means for yields. In general, consensus is that yields are likely to stay very benign. Maybe they fall another 20, 30 basis points. And that could perhaps spell some trading gains for banks. At least that's one narrative. And that seems to be explaining the trigger, the spark that the Bank Nifty needed. By the way, the Bank Nifty is still not at its all-time high. It's just about 2% off that peak. But that was that one engine that was not firing. That's decided to come to the party. And this is where we are. But guys, having said this, I mean, I just want to place on board yet again, we're looking at all-time highs, again, minus FPI participation. FPIs remain on the sell side. That's not changed. Almost on a daily basis, we're still getting those 1,000-point sell figures. But then, hey, it's our party. It's local. And it's on.
Well, maybe the last leg comes in when the FPIs decide to, do short covering.
Yeah.
And that could be the last, leg for our rally. But, even on the mid-cap end, right, the mid-cap index is just up close to about 0.3%. But there are many pockets doing well. And one of them is the entire shipbuilding stocks. So Garden Reach Shipbuilders is reacting to numbers. So that stock has surged close to about 17-18%. But even outside of that, Cochin Shipbuilders, that's shipyards, is up close to about 12-13%. Mazgaon Docks is up 7-8%. So, even the mid-cap end on individual stocks, the screen is very much alive. RVNL, IRFC, so railway stocks. So we're about 7-8 days away from the election verdict, and all the stocks which did well on the back of government policy are the ones where there is buying. So whether it's railways, defense, shipbuilding. So that clearly tells you how the market is entering into this, the election verdict.
Well, that's right. Let's get in a technical comment then on how do you trade from here. Rahul Mohinder joins us to fill us in with that. Hi, Rahul. Well, a 300-point rally is what you're seeing, and it's a large cap heavy day. Because if you look at the breadth of the market, still you have more number of stocks declining in comparison to number of stocks that are advancing. Even the mid-cap index is up only around 0.3%. But Rahul, how would you trade it? I mean, if you already had a long position, I guess you should be trailing your stop loss. So where does that number come in at? And also, what levels are we looking at on the upside from here on?
Okay, let's start with an index perspective, and then I'll move to some stock-specific ideas. Number one, if you look at the two indices, the Nifty index and the Bank Nifty, of course, the Bank Nifty is the one to be chasing. And I mentioned this, 2 days ago on the show, that even though the Bank Nifty is slouching, that's the one that has more potential. Even from this point, we have well past 1,200 to 1,300 points to hit a new high, which definitely makes it a strong candidate. And when you start looking at the internals, you start seeing a lot of consolidations which are attempting a breakout. I mean, for example, an SBI, which has been range bound for the last 2 or 3 weeks. You can see Axis Bank coming out. I mentioned earlier in the week that Kotak Bank too was a good opportunity when it had that drop earlier this week. So banking is, I think, my heavyweight theme, and Nifty Bank would be the index of choice. So even at this point, I do think that you'll probably see levels of 48,400 respected, and we could potentially get to that 50K plus mark on the Nifty Bank. So that's it from the Nifty Bank. If you look at the Nifty, there is somewhat of a hurdle, somewhere closer to 23,000, give and take 50 points from that 23,000 marker. I think there could be a strong barrier, and not just being a round figure, but technically too, there's some important, resistance barriers we hit there. And looking down the line, maybe we have a good pause around 23K, and then we move to about 23,300 to 23,400. So I think that's the kind of upside we're looking. As a percentile, it's not huge, but that's the trajectory which traders need to keep in mind given the next 3 to 4 weeks down the line. So I don't think we're really getting past 23K in such a gush that we'll immediately hit that 23,400. I think there will be some pausing. Of course, we all like it straight line, but one should be ready for that kind of a correction. But coming to stock specifics, I talked about banking, and again, SBI, as I mentioned, the 795 to 840, very nice range that it kind of held through for 2 weeks, still within that. But one is seeing that attempt, and one can clearly see that the stock has the potential to move to about 855, 860. So give a stop loss of 825. One could go long. ITC, of course, numbers are out, but 450 to 452, a safe target you could be trading in for. Keep a stop loss below 436 on this one. Very tight stop. Reliance could be the momentum driver, and could even hit the 3K mark. I was just watching the kind of volumes, on an intraday chart, quite sporadic as those up moves came in. And therefore, I think that would definitely be on my list too. That should help the index a good bit.
Oh, yeah, absolutely. Reliance actually started moving, and that did sort of change the mood. And what we have, of course, is this big all-time high number. Thanks for that. Rahul, we'll come back to you for some more ideas in just a bit. By the way, looking at the screen, Reliance is one stock that's powering ahead. The other one is L&T, looking very, very smart and strong with a gain of about 3.5%. And some of the Adani Group companies are major movers in today's trading action as well. Look at ports, look at enterprises. Both of these stocks up between 3 and 7% actually almost on Adani Enterprises now. Let's bring in our first guest on the show. Devin Choksi is joining in. Devin, hi, good afternoon. What a comeback by the Bulls, right? Just ahead of the major event, that, pivot day on June 4. What would your advice be? Because now it seems, the market's sort of covered all its uncertainty and we're going into the event at all-time high levels. So how would you, look at the placement over the next couple of sessions till we get to the event?
Yeah, good afternoon, Surbi. Leave aside, I think that euphoria, for a while, in the calculation pertaining to the election and the results thereafter. I think the numbers on the economy front, they look absolutely, very convincing. Beginning of this month, we had the number pertaining to the GST collections of 2 lakh crore plus. Today, we have a collection numbers, dividend payout numbers from RBI to the government of 2 lakh crore plus. Now, if you look at, the possibilities because of these numbers, that is something which is what the market is liking about. Every rupee which the government is collecting from whatever the resources, including, the RBI's dividend, it is understood that this will help the government in spending money for the infrastructure. If government ends up, spending this money on the infrastructure, and if there is a 7 times, time-changing possibility on that, what we are talking about is 14-15 lakh crore worth of amount being spent in the economy, or amount getting exchange, changing hands happening in the economy. And that could also mean that somewhere around 1,50,000, 1,80,000 crore worth of GST collection also happening on the top. So obviously, the spending increases, the consumption increases, and entire economy will move faster. And that is what is convincing people out here. At the same time, the corporate sector is talking about absolutely very robust kind of a performance going forward. In most of the commentaries that we have heard so far in this result season, I guess in each and every sector, squarely, the companies have talked about their business expansion plans. They have talked about, the business growth in the subsequent quarters and all. So from that perspective also, the market looks pretty convinced about going forward the journey as it is. Maybe the valuations are stretched, but given the situation of higher amount of liquidity into the system, and given the situation that domestic money is chasing good amount of stocks, the bull market valuations will remain stretched. So maybe 10-15% kind of a stretch valuation, if you get some opportunities at a lower levels in some of the large cap companies which we find, I guess that is where probably we'll make money out of this market and just stock specific basis.
Okay, let's get to some pharmaceutical, news flow. There is some news which could be negative for Lupin and Cipla. There is a competitor for albuterol sulfate. Ekta joins in with the details and the implications. Ekta.
Thanks for that. Well, the news is that Amphastar has received US FDA approval for albuterol sulfate, which is basically an inhaler that Cipla and Lupin have been selling for the past couple of years, and where they have significant contribution, which, they have around 10 to 15% market share each in this particular inhaler, and hence they are important products for both of these companies. Now, there is a negative read-through for both Lupin and Cipla simply because, like I mentioned, albuterol is the second largest revenue contributor to Lupin and Cipla's US revenues. The new player, we don't know as yet, but it is assumed that there could be some amount of price cuts that they could resort to, which could be to the tune of around 10 to 25%, and that could result in price erosion. But remember that this is basically par for course for other companies to launch the same product or the generic version of certain drugs in the US market, and hence there could be a price erosion that Lupin and Cipla could face, but they already have a significant amount of market share. and the street was anticipating incremental competition for albuterol. So yes, while the news is negative, it is largely normal business for US generic companies to see other companies launch the same generic version of the drug, and hence maybe eventually we could see some amount of recovery take place.
Okay, thank you very much for that. But one stock where the bears are in control is Sun Pharma. That's the top Nifty loser after the company's revenues came in below estimates. US sales also were lower than street expectations. That said, the margin performance was a tad bit better. Group CFO CS Muralidharan spoke to CNBC TV18 about the company's guidance for FY25 and the steady increase in R&D spends. Listen in to excerpts from that conversation.
So our revenue guidance of high single-digit growth of FY25 is based on all the businesses which are poised for growth. As far as the EBITDA margin guidance, we have not been given guidance on EBITDA for last couple of years at this point of time. We mentioned in yesterday's call also, we believe that these are some site-specific issues. We are working to address them in due course after we have completed the entire remediation work. The facilities will be presented to FDA for re-inspection. That's what I said, that we once we complete all the remediation work, which is ongoing, we will definitely invite FDA for a re-inspection of this site.
Okay, all right. Deven, good afternoon. Good to see you, Vin. What's your take then on the pharma stocks? You know, they've pulled back considerably, though for the year to date, still they're the big outperforming sector. Your take?
Hi, Nigel. Good afternoon. Well, I think we continue to hold the strong buy on pharma companies, particularly the larger ones like Sun, Cipla, Dr. Reddy's, where the contribution of specialty generic products, I think, is increasing, and also the margin because of that. Given that situation, I think most of these companies are absolutely firmly positioned into the US market included. And that is where we believe that I think the higher amount of business contribution in the subsequent period of time to continue. Even if you look at the growth and the valuations at this point of time, even for a company like Sun Pharma, I think on a growth of around 34-35%. And if you normalize after the exceptional items, it is somewhere around close to 39%. I would think that I think the valuations are still not so expensive. I think the valuations, I think at 37, 38 times price earning trailing 12 months. I believe that I think it is still not expensive given the kind of growth that they are achieving. So from that perspective, I think we like some of the larger companies, though fully understand that I think the market might correct to a certain extent. And should it happen, I think in a near future, probably I think it becomes a buy opportunity for earning 20-25% return from the lower levels into the next 1.5 year time.
Okay, so valuations are fairly attractive. Deven, that point is taken. But right now, the street is concerned about the fact that the company is only guided for a high single-digit top line. And they're also talking about high R&D spends, which could, according to analysts, maybe hurt their margins. Deven, thank you very much for joining us today on Closing Bell. We'll get into a break. On the other side, we'll invite Vinay Jaisingh, MD and Co-Head Portfolio Management Services at JM Financial. Stay tuned.
Welcome back. The move is on. 22,900 still on the screen. I'm not sure if that 23,000 peak is going to be conquered today itself or not. But it's a fabulous move for what it's worth. By the way, ITC has seen a really good reversal. ITC practically at the highs of the day right now. There's a volatility on the stock. It fell, but now we can see it rising back again. We'll have Mangalam back up on this in just a bit, because the thing is that optically the numbers look like they were a little below estimates. But the two main engines, which is the cigarettes business and the FMCG business, they seem to be fighting away pretty well. So the markets are taking that on board as well. Well, let's move on and say hello to our next guest on the show. Vinay Jaising, MD and Co-Head Portfolio Management Services at JM Financial is with us. Vinay, great to have you, and good day to have you on as well. I mean, it is a full-blown bull charge once again on the street. It seems that the market has digested those election jitters. But you tell us, I mean, what we're looking at this big binary event on the 4th of June. What after that?
Well, I think if you were sitting not in India but any other part of the world and looking at investments in India, you want the big binary event to get over before you take your call of what investments you want to come into the country. So I think that's step one. FIIs who in the last, last month have been sellers of as much as $3 billion, they're already at about 16.5% weightage. One of the lowest in the last 10 years in terms of what their ownership is for India. Today, DII is a little more than what FIIs own in India. And that number is coming at a time where MSCI has actually raised their numbers from, let's say, 6% 10 years ago to 18% today. So, you wait for the election to come in, you wait for a politically stable government, and things should, as far as liquidity is concerned, do much better. So that's step one. What more after that, look at the 100-day agenda, which, whichever political party comes into the picture would showcase. You have the manifestos already spoken about. If the existing party comes into the power, you'll hear a lot more on infrastructure, rails, roads, power, capex, and the way to move ahead in that. So you'll hear a lot of noise on the budget, whether, the capex spend is going up. I think these are the two things we would look ahead for. One is liquidity post stable government, and second is what is the manifesto or what is the road ahead with the party which comes into the power showcases to us. Post that, I think analysts will look at rating their numbers, or just simply put, if the existing government comes into power, just raising the bar on the P of what they would look at purely for stability.
Vinay, morning. So getting straight down to the portfolio choices and bets from here on, right? You've been a believer in specialty chemicals. In every conversation you've spoken about it. What have you made of the Q4 numbers from the companies in your coverage? What does it tell you about the outlook? And how are the current valuations?
So as far as specialty chemicals are concerned, this is one of the spaces wherein we've gone more wrong than right. Touch wood, the other spaces, including capex, we've gone a lot more right. The results of most of the numbers which have seeped in are not as exciting, courtesy China. As a result of which, we've actually reduced our weightages in specialty chemicals. Having said that, one of the companies we are looking forward for results to come out is Blue Jet. It's a pseudo specialty chemical moving into, the API/pharmaceutical space. Therein it has three engines running. One engine basically is the sugar-free engine. The second engine is the API engine, and the third is the contrast media, wherein it's a market leader globally. So as far as specialty chemical as a space is concerned, you're close to the bottom, but you probably are a quarter or two away from seeing demand really come up for the rest of the world.
Hi Vinay, good afternoon and good to see you in. And I think on specialty chemicals, you had a couple of stocks that you like. Tatva Chintan, I think, was one of them, and there was one more, I think so.
So Blue Jet, Tatva Chintan, and Arkin were the names which we were mentioning to you earlier.
Okay.
Arkin's kind of played it straight, so we are at the bud, incrementally reducing our weightage out there because we've made the easy money. As far as Tatva Chintan's concerned, it's been rather disappointing, as I was mentioning. The story remains the same, which is in the next 1 to 2 years, you need to see them move to building capacitors or getting into the EV part of the space. Today they are a big manufacturer for CVs for the SDA requirement and electrolysis as well. The capacities have come up. I think it's very rosy a picture if you were to look at 1 to 2 years. But the problem is when you're looking at markets like this, the other stocks are running up a lot more. I would strongly suggest, you need some of these names in your portfolio because you can't just buy the high PE names. These are rather disappointing names, which as China opens up or as demand of the world incrementally does well, or just simply put, as EV takes off, these companies will get a lot more demand than one can imagine.
Okay, all right. Let's talk about a couple of other themes that you have liked, and some of those stocks, they corrected a little bit, but they got bought into. BEL and Vatek Vabag, both those two in the past we have discussed, and you've got an early actually on both those two names. Currently, what's the call on both these two names?
We're not complaining on both these, as I was telling your colleague earlier. If the manifesto is to invest in CapEx, there are two segments where you will see investments increase. One is defense. Remember, India's defense expenditure is just $20 billion on a yearly basis, as against, let's say, $250, $260 billion of US. We're doing two things in defense. One is we are increasing the CapEx spend. It's gone up by about 2 to 2.5x in the last 10 years. But the second is we are buying a lot more domestic defense projects. BEL is one of the big gainers for projects coming into the country. And what BEL gains is whether Hindustan Aeronautics or Bharat Dynamics or any other company gets any electronic requirement, BEL automatically gets that story. Its overall order book also is pretty strong, at about 3.5 to 4 times. Having said that, now at a multiple of close to 40, we are more waiting for a correction to incrementally increase our investments. At today's price, we would prefer Hindustan Aeronautics over Bharat Dynamics or Bharat Electronics, but we like all the defense space, period. That's something we want to be invested in. Moving to the water space, again, very similar story to defense. In 2014, the government invested about 150 billion in water treatment. Today, that number's gone closer to $1 trillion. And the number of companies in the water space or water plus management space is literally a handful. VATech shines out here. Last quarter was not too good. Their analyst meet is, I think, tomorrow afternoon, but they still stay with a 3.5 to 4 times order book. They've successfully commissioning desalination of Chennai, which means, virtually maybe 60 or 70% of Chennai will get salt-free water, even if you take it from the tap, which is a big thumbs up for, I think, India as a whole. And once that succeeds, you'll see a lot more orders come up from the other cities as well. In terms of ratios, the company is already between 15 to 20% as far as returns concerned, and very similar number of earnings. Their net cash, and it's at under 15 time 1 year forward multiple. So even valuation is attractive. So we are currently buying these stocks.
Got that. Yeah, we were speaking with VATech Vabag actually just yesterday, and they did make that point that this compression in the order book, which they witnessed in FY24, that'll be a thing of the past, and they're hoping to grow the order book this year. So take your point on board. But Vinay, let me expand that question on capex and manufacturing. So defense is one, and you've explained very well what you like there and how you're looking at valuations. What about the other aspects of manufacturing? Capital goods companies, for instance, they've had a pretty good quarter as well, at least most of them. But again, what is the valuation dynamic like? Or if you're looking at manufacturing from an auto perspective, then just basically tell us, where do you still find some amount of value if you want to play capex and manufacturing?
Sure. There are actually a couple. First and foremost, since you said capital goods, look at Kirloskar Oil. That's something we've been, talking with you all consistently, I think, for the last year. Yes, the stock's done well, but it's still under 20 times multiple. It's moved up the chain on the value it's producing on its equipment, but more importantly, it's also improved its margins. What's interesting is, there's a 4,800 crore book, ARCA sitting in them, which sooner than later will probably be unlocked by the management. So this is one thing we like. Again, return ratios are between 15 to 20% plus. So good return ratios, relatively attractive valuation. That's one of the names we like in capex. Sure. In clean energy, we like a company called MTAR. This is a company which, gets about 60% of its overall order book coming from another listed company in US called Bloom Energy. And about 35-40% of its revenues, it's getting in from companies in the defense and the nuclear space. Earnings growth, fantastic, which is north of 40%. P at about 25 times 1 year forward. Come down from a P of somewhere close to 35-40 times. Results of this stock is weighted, but I think this is one of the small caps we really like.
Sure.
So these are the two names I would focus off as far as capex is concerned, and then you get into power as well. You've got a couple of interesting names there.
Vinay, great conversation, but we'll have to leave it here because we've got a management waiting by to talk about their Q4 numbers. And this is a conversation you should listen into. BEL, a company that you own, they reported their revenue, margins, profits earlier, beating estimates. The company's FY24 order book came in at 35,000 crore rupees, much higher than their guidance. Bhanu Prakash Srivastava, CMD of the company, is now with us. Thank you very much for joining in, sir. Q4 was a strong quarter. Your order inflow has seen very healthy momentum, and you've guided for 25,000 crore of order inflows next year in FY25. Where do you see it largely coming from?
This is coming from all the three services. In fact, based on the processing and all, we guided around 25,000. But the way government processed the order on high priority, many orders were supposed to come in this financial year. They were fast-tracked and we got the order in 23-24. That's how it overshot our expectations, and we clocked around 35,000 crore of order in financial year 23-24.
Okay, that's on order inflows. You've also maintained a 50% revenue guidance for next year. Now, historically, H2 is better than H1. Now, looking at the current market dynamics, how do you see growth in the first half of the year, considering there is also elections which are currently underway?
Normally, in our type of business, H1 is slightly lower than H2 because we have to mobilize. Systems are not, we are not able to what you say that streamline or are not able to integrate the system in a very short time. So what we do in Q1 is what were already going on in Q3 and Q4 and get cleared. Still, we expect around 15% growth in Q1 as compared to what we did Q1 last year.
Okay, all right, sir. But what are the key growth opportunities in the non-defense space? Your non-defense sector contributed close to around, I think, 15% ballpark of your revenues. And in FY25, you aim to maintain the same. In the long term, by what percent you plan to scale it up to?
I think that our defense to non-defense will remain in 85-15 in this range. Because even though we are putting a lot of effort to diversify and scaling up in non-defense, defense is also increasing at equally fast pace. So non-defense will remain. Some of the area where we are working very hard in non-defense are airport surveillance radar, air traffic management system, metro solutions, railway business, and then cyber security solutions. These are the area, homeland security, smart city business. These are the area where we are concentrating on civilian sector. Similarly, that perimeter security system, for various applications. These are the area where we are concentrating in non-defense sector. But in my opinion, defense and non-defense ratio will be in the same range because defense also is increasing with the same pace.
Mr. Srivastava, you've guided for 23 to 25% EBITDA margins. That's the band you're talking about. So what are the key drivers for margin expansion that you expect this year? And what is the profile of the non-defense business and the defense business? If you could just give us the breakup.
Segment-wise margin profile, normally we don't do, but overall 23 to 25, seeing the current product mix, we anticipate this margin. It's basically because of better efficiency, operational efficiency, project management, and then indigenization, alternate sourcing. These are the factors which affect which improves the margins.
Okay. Talking about large ticket size projects over FY25 and FY26, what are the big orders in your current pipeline or in the order backlog?
In FY25, what we have anticipated guidance we have given of around rupees 25,000 range. There we have not considered very big ticket item like QRSAM. Because the way values of QRSAM are there and even A1 has not been taken, we are giving input to defense for services. We expect QRSAM to materialize in 26 financial year. So in 24-25, it's mainly routine type of business, which will be, few of them will be in the range of 3,000 to 2,000 crore. And most of the products will be in the range of 1,000 crore to 100 crores. but it will be a large number of products and spares and line items. It will be.
All right, sir, but you're targeting close to around $110 million turnover from exports in FY25. Could you tell us which regions will largely contribute and which project profile will this be?
Exports are normally in two categories. One where we do the offset business and subsystems manufacturing for our global partners like Thales and others, and also product going in some offset obligations. Another is that where products like radar and electro-optic system, coastal surveillance system, we export it to friendly countries. So both taken together, it will be in the range of around $110 million in financial year 24-25.
Okay, just a question on geopolitics as well. You've reduced your exposure to Israel quite significantly, I believe. In the conference call, you've mentioned that the impact was minimized in Q4. Can you just give us some more details there? What is the outlook and what linkage may you still have, if any?
If current situation continues, impact will be minimum because there were logistic and supply chain issues we faced immediately after that starting of the war in October. So it took some time before our OEMs, they made the alternative arrangements and established the alternate SOPs to take care of supply chain issue. So it did, there was a spillover from supply during Q2 and Q3, but largely we were able to overcome in Q4. Remaining whatever challenges are there, both BL and our partners, we are working to eliminate that also, so that to a large extent we are able to address in this financial year.
Okay, one final question, sir. You've entered into an 850 crore rupee contract with L&T for the supply of communication and electronic warfare, sensors and systems. What's the key execution timeline for this particular L&T order, and what are the margins you're working with?
Normally, product-wise margins we don't specify, but definitely for their cadet training ships and multi-purpose vessels, we are giving many equipments, and the supply will be based on their delivery schedules for platforms. So, starting from something in this financial year to next 2 to 3 years, it will be completed.
Okay, all right, Mr. Srivastava, we'll leave it on that note. Thank you very much for joining in, and good luck for the year ahead. We will take a quick break on that note. We'll come back on the other side, get you a check on what the buzz is in dealing rooms given today's mega rally, and of course some final trading calls as well.
Welcome back. Well, it's a bazooka move is what we're seeing on the Nifty. We're almost at around the 23,000 odd mark. The markets are preparing for life about 23,000 as we speak. The Nifty Bank, just take a look at the shape that it's taken. Yesterday, we were staring at around 47,800, 47,500 as well today. We're up 1,300 points in 2 sessions from yesterday's low. Just take a look at today's screen, more than 1,000 point up. And that's the one that's really driving the Nifty higher. Well, Nimesh joins us to tell us what he's picking up in terms of D-Street chatter. Nimesh?
Hi, Nigel. What a move for the markets, right? And the feedback from the dealing room is that while the Nifty markets are at record highs, the Bank Nifty has rallied pretty hard. But if you ask any trader on the street, they would have not made money. The overall market was quite light from a larger HNI perspective. They've reduced a lot of the positions in the market. FIs were net sellers, and now we are seeing a big move in the markets today. Again, largely led by financials, and even in the financials, the FIs have been net sellers. The positions are quite light on the financial side of the market as well. So it's kind of a left-out feeling as well, so to speak, Nigel, from today's move. I guess what led to this big short covering rally in financial is the big RBI dividend payout, which has been a big surprise to the street, and I guess that's led to a bit of a short covering rally in the banking stocks today. I guess what has led to this is largely all the domestic facing sectors have done well. The auto index is up 2%. So is the capital good index as well. So looks like today's rally is largely domestic driven, banks, autos, financials, and for that matter the capital goods as well. The only space which has done a bit underperforming is the metal names, and some bit of individual pharma stocks are under pressure today. But looks like it's a very sharp short covering rally in the financials, which has led the markets to hit a fresh record highs. And big move in the large cap names as well.
Yeah, it's absolutely breathtaking. Just 12 points away from the next milestone, 23,000. Let's see. Really phenomenal. Nimesh, what about stocks? Anything specific that caught your eye?
Well, the first stock on my list today is Adani Enterprises. Normally, it doesn't come into my chatter list, but big move on that stock, up 7% last I checked. The volumes are on the higher side as well. There has been some bit of HNI buying, but I guess the big trigger for the stock to do well is the anticipation that maybe Adani Enterprise will replace Wipro in the sensex in the review, which is going to come in a day or two. So that's been the key reason for the big outperformance in Adani Enterprise today. The second stock is Vedanta. Well, the stock is under pressure today, but for the last couple of days, there is institutional based buying happening. And even in today's trade, while the stock is down, it's recovered from the lows, but there are buy flows, is what I understand from larger FIs in Vedanta. The third stock is BEL. We heard the management. There were a lot of upgrades as well from FI brokerages. But in general, in today's trade, there has been selling pressure. So it looks like after a big rally in BEL, some bit of profit making is visible in today's market, especially from larger FIs in that name as well. And the last is Engineers India. We've seen a bit of rotation in the PUCs as well. This stock stands out today. Good volumes from larger HNI is what I understand. And some large HNI investors seems to be quite active buyer as well in Engineers India. And in fact, the feedback is technically above 270, 273. It's a multi-year breakout as well on Engineers India.
Okay, thank you very much for that. In fact, generally PSUs today are taking a bit of a breather and not participating on the way up. So the Nifty PSC index is absolutely flat. Rahul Mohinder of ViraTechIndia.com is with us on the show. Rahul, 23,000 is almost here in the Nifty, still some distance away from 50,000 on the Nifty Bank. But how would you position yourself now? Any BTST calls?
Yes, the market continues to keeping on surprise because of the kind of speed it's certainly on steroids. I would be a little cautious from taking a new index position, but having said that, as I mentioned, 23,400 is what I foresee, in a few days or a few weeks maybe, is how I'd like to phrase it. Stocks specifically, much better ideas. I was looking at two stocks on my radar. One is Bajaj Auto. If you look at today's overall volumes, probably would be one of the highest volumes we've seen in the past 4 weeks. And plus, we've got a very steady incline on the price and the volume formations, even on an intraday chart. So I would buy the stock for a 9,200 odd target. Let's peg 8,900 as a support. So keep a stop loss below that. Another stock which caught my eye on, again, the back of volume, was Jubilant Food. Massive price action there, of course. But what I'd like to say is 450 is excellent support, established support. Use this volatility to probably get in for a 510 target. with a stop below 450.
Okay, Jubilant FoodWorks has corrected. The day's high today on Jubilant Food was above 500 rupees. Numbers were good. They've returned, at least Domino's is showing some growth like to like. But, Jubilant FoodWorks is coming for some profit booking. But let's focus on some market opinion now. Ramdev Agarwal, the chairman and co-founder of Motilal Oswal, says the election results on 4th of June will give more clarity on the economic and infrastructure boom. Adds that he's bullish on government continuity.
It's a festival of infrastructure, the start of infrastructure boom in India. And infrastructure boom happens when the economy booms. Because economy booms, the taxation booms. When the tax collection booms, infrastructure booms. So that cycle is on, and it's just about the beginning. And once this little bit of uncertainty in the market gets over on 4th, I think we are going to get much more clarity about what shape of infrastructure boom country is going to have.
So you gave me my segue into the next question. Speaking of 4th of June, just 9 trading sessions left for the election, for the D-Day, for the result day. What is your sense of the government that's going to be coming in? What are you pitching for? What are the numbers that you're looking at? And especially in context with market, how do you think the market sentiment is going to be like?
So, one, the outcome of 4th is not knowable. Okay? The rest all are the at best intelligent guess, but my sense is this is not knowable. And hence, let's not worry too much about it. General environment is good, mood is very good, so retail participation is very good, that boom is on. So I would think that 4th will come and go, and then we'll see the vision of the next 5 years, and vision about the infrastructure, defense, consumption. A whole lot of things will be, it will be a very exciting phase of next 100 years, starting from 4th of June. So markets will also respond to that. In any case, retail boom is on. I think the real, of course, the domestics are very, very positive, but foreigners are not that excited about the, are they selling because they don't want to take the event risk of 4? If that is so, then that could also reverse. And if by chance they reverse, even for a few days, I think we'll see a lot of excitement in the market. But again, the behavior of FI is also not knowable. So why bother about it?
So FII come back, or maybe they may not come back. Not knowable at all. But speaking of, so let's say the BJP continues to stay in power. What do you think will be the effect of a continuity in the government?
Yeah, so continuity means there is no break of the policies. If anything, whatever policies were pursued, it will be pursued with a lot more vigor. Say Vande Mataram train, if they have done say 200 or 300, they may do in thousands. So like that, much more bigger ambitious things will be rolled out. And it also depends on how the economy responds. Because government can respond based on how the economy responds. Because when the economy responds, the tax collection comes. If the tax collection comes, then the government's actions also happen. So, it's a I would say double engine kind of thing. The economy and the government action. And so I'm more bullish on under the continuity, the economy will pick up.
All right. The markets actually, we're almost at around that 23,000 odd mark. We're just around 9 points away. Big up move is what we are seeing. And, the last leg, actually, we're seeing a few stocks that are really taking off. Even some of those metal-related names that were trading in the red, they have popped up in trades. If you look at JSW Steel, now that's done a U-turn. TCS is piling on the gains. Bharti Airtel as well. And 9 points away from that 23,000 odd mark, Surbhi.
400 points. And Nigel, I don't know, hand on heart, I don't know how many traders could have guessed this sort of a move today, given this kind of sort of buoyancy that we've got going. And it's firing on all cylinders. I'd want to see if anything changes in the cash market FII figures, because like we've been saying now, that's the only sort of spot which is not adding up. Is this a cash move from the FII fraternity, which has been sitting out so far? Remember, for the current month as well, for the month of May, overall cash market selling is to the tune of almost 28,000 crore rupees. So are some of those positions shifting before we get to the big June 4 event? That's what we need to watch out for. But look at Reliance, moving in style, 2% higher. Banks, we've been discussing that. A lot of infrastructure stocks have been doing pretty well. FMCG names have not been too bad. Today, even IT for a change, I mean, even that's kind of, at least a market performer, Infosys, Wipro, a lot of IT names also adding to the party. In fact, on the downside, we don't have too many stocks. Only individual result reactions where there's a disappointment, for instance, a Sun Pharma or a Power Grid. But otherwise, it's a strong move. And Nigel, like you're saying, I mean, some of the metal counters that were witnessing profit booking, even there, the sentiment is turning around. So we're just a couple of points away from the next milestone, 23,000. But I think this is after the jitters and, the Ides of May, if I could say, the middle of May, all of that uncertainty is behind. And I think the bulls have made up their mind. They want to go in long and perhaps a front foot forward as we get into the big event.
I think we have to wait a little bit longer for the 23,000 odd mark. For the time being, we'll slip into a short break, come back. We'll continue with Market Talk on the other side.
Welcome back. So the mega up move remains. That's been the story of the day. We have Mayuresh Joshi joining in to make sense of what's been going on the screen. Mayuresh, hi, good afternoon. The screen's telling you one thing. It's that perhaps bulls are confident. CapEx, manufacturing, auto, banks. That's what today is all about. Your thoughts?
Afternoon, Surbhi. Absolutely. I think with the RBI payout yesterday, I think the entire consensus in terms of infrastructure spending is back with a bang. And with the expectations of a stable government expected to continue for the next 5 years and the reform processes thereof, I think the accelerated investments surrounding infrastructure, including capital goods, including a whole proxy in terms of housing, cement companies to a large extent as well to support that thesis as well. I think that entire move is getting well supported in terms of domestic cyclicals, expected to continue doing well. So yeah, I think earnings have been stable so far. Macros are looking good with the GST number that we've just witnessed, the RBI payout. And globally also, I think things seem to be coming back on track. So I think liquidity along with all macro and micro factors firing up the indexes on all cylinders.
All right, Mayuresh, I wanted your view on a couple of names, which have actually done well, but they're coming for profit taking today. IMFA, that's Indian Metals. Now that stock is down close to around 3.5%. The first look at the numbers tells you that, they're quite disappointing on the margin front. But a closer look tells you there's a big spike up in the other expenditure. So there could be a one-off that's being factored in out there, just looking at those numbers. And we know that ferrochrome prices are very, very strong. That's virtually at the low point of the day. So that's one stock. And the other one is HEG. The stock is down 15%. Numbers are disappointing, and they have announced this demerger which the street is still coming to terms with. Why did they announce it? Both these two have, good tailwinds, but for the time being, they're under pressure. They're ancillary, so to call it, of the steel space. Your view on either of them?
Afternoon, Nigel. No, again, I think numbers in the case of HEG were definitely disappointing. They were very, very soft. But in the case, in a structural case going forward, I think at some point of time, as demand starts coming back, and the green steel concept that is now getting discussed within a large part of the European markets, I think that is going to be a game changer in the next few quarters. So I think a lot of companies need to revive their processes in terms of how steel is probably made. HEG probably in the right direction as far as that structural step is concerned. Obviously, what happens in terms of needle coke prices, how do they evolve over a longer period of time, will also have a say in terms of the overall operating performance. But I think the structural side of the story remains with these graphite electrode players. So I think there is a structural element as a tailwind to both HEG as well as Graphite India. As far as IMFA is concerned, ferrochrome prices are very, very stable, expected to improve going forward as well. Yes, I think the numbers in terms of one-offs did play off in terms of margins. But is there an expectation in terms of some element of recovery that can come through in the next few quarters? I think I've seen the management, you interact with the management a lot of times, Nigel, and the enthusiasm emits from the fact that at some stage, the stability will come back. Obviously, it's a commoditized play, but I think the end applications, realizations expected to remain strong will remain a tailwind for this case as well. So I think, both the cases have structural tailwinds behind them.
Just quickly, Mayuresh, trying to squeeze in two questions at one go. We didn't have too much time to talk stocks, but in case you have a view on Nykaa, please tell us. Market was not too excited with the numbers after Q4. And also shipbuilders. I mean, it's absolutely phenomenal. The rally in shipbuilder stocks today. Garden Reach is now ending almost on circuit.
So Nykaa again should be soft numbers, so I think we'll let that pass for the paucity of time. But yeah, I think the shipbuilders are acting like rockets. So you look at the share prices that all these shipbuilder stocks have probably delivered over the last few quarters, and they are delivering on numbers. So I think the only two angles that need to be looked out for is how will they execute? Is there an execution risk for any or all of these stocks going forward? What if they miss a couple of quarters in terms of not executing that well and therefore having a patchy annualized number as well? And the second risk obviously emits from the fact in terms of the receivable position as well. But I think the second risk probably seems to be a low probability in terms of how the government balance sheet is stacking up, how payments are probably happening, how the working capital days are playing out. So I think the only risk that happens for these stocks will be is execution. Fingers crossed, I think if they're executing well, I think the momentum can very well continue.
Okay, all right, Mayuresh, short but effective chat. Thanks a lot for joining in and giving us your quick analysis on a whole host of those names. Well, time to wind down on the markets. Then we came off a little bit. We saw 23,000. We thought it was within kissing distance, but we end a little bit off that. Though on an average, we'll end closer to around 22,970 or thereabouts. What did very well today? Adani Group stocks, they were back in style. Adani Enterprises, Adani Ports, both of them firing away. And domestic-facing themes, Mahindra & Mahindra, L&T, Eicher Motors, all of them, bazooka moves is what we saw. These are frontline names that saw a big rally today. And the banking names would be, what a dream run out there. 1,000-point rally is what we're talking about. Took out the 50, took out the 20-day moving averages in style. And that was the big driver today.
Oh, absolutely. I mean, huge moves on these stocks. Even other names on the large cap screen. I mean, Reliance was playing ball today. You had stocks like, TCS, Infosys from the auto pack that weren't too bad either. So it was pretty much all guns blazing. Can't really complain much. ITC, by the way, is ending absolutely flat after its numbers. Let's talk about mid-caps. The mid-cap index has underperformed the large caps. There's no two ways about it, with a gain of just under 0.5%. The advanced decline ratio mildly negative. You've got over 1,250 declining stocks today versus about 1,100 advancing stocks. So it's more stock-specific, the action there. But the PSU trend was still evident. Today it was more about shipbuilders. We were just discussing these stocks. Look at Masgaon Dock, look at Garden Reach, look at Cochin Shipyard. Massive, massive moves on these shipbuilding stocks once again. And, railways don't want to be left behind. They're speeding away as well. So RVNL, IRFC, once again, good moves coming in over there. Then there are other names as well. I mean, there's a Vodafone Idea that had a good session. Torrent Power, where numbers originally were thought to be sort of a little lower than expectations, but it turned around. The sentiment remained positive around the company and the prospects. So that stock managed a recovery. Page Industries slightly lower after earnings. So basically, for the mid-cap market, it was more about reacting to individual numbers. The bigger, larger, broader move really was in the big arena, the large caps today. Bell has gone 22,952 is the closing figure, with a gigantic 350-point up move and fresh highs on the Nifty as well as the Sensex. Well, that's a wrap on this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere because we have our special edition of Bulls Charge ahead coming up next.